What's up guys, this is J and welcome to my channel. As you guys probably all know, the market has been moving very volatilely to the downside. And just like you guys, I am not liking this. My account has been melting down quite fast. But good thing for me is that since I knew February is one of the worst months of the year for stock market, I slowly cashed out 50% of my portfolio during the last week of January and the first week of February. The main reason for the current stock flush was due to the sudden rise of 10-year treasury yield rate. The increase in yield rate itself isn't necessarily the problem, but how fast it went up was the main issue here. Increase in yield means that economy is recovering in the long run. If you see here on the charts, during March of 2020, when the pandemic hit, the yield was at its lowest ever, and after that it went up very gradually. Up until recently, where it spiked up all the way to 1.52% in sudden move. This probably caused investors to shift into other low-risk investments, which means a lot may have took out their investment from growth equities. So I don't see this as a bad situation for overall market itself. Rather that there was just some major shift in market from one sector of the market to another. If you look at the major indexes, there was only 4 to 7% correction. Only stocks that actually fell was the growth stocks and specs. And even for those stocks, for example Tesla, there was not a sign of pandemic sell at all. Take a look at the volume of when pandemic hit, the current volume compared to the average volume. Selling volume during the past couple of weeks was not high at all. This tells me that institutions did not sell much of the stock. The falling of the stock probably caused by individual sellers or very thoroughly planned short selling within a certain period of time. So I feel very confident that my portfolio will pick up its pace soon for another bull run within a month. And now I'm planning to buy this dip. But there are several things that I will watch out for. First is that there is auction for 10-year and 30-year treasury notes and bond on March 15th. And second is that there is a major option expiring on date of March 20th. And lastly, I do expect the market to retrace a bit more. When I took a look at the SPY, it only retraced around 4%, and I don't really consider that as a proper correction yet. I will always keep in mind that retracement of additional 3 to 4% might happen, just like how it did during the retracement in September last year. Once that is all over, and if nothing terrible happens, I firmly believe that the market will move very bullish. And by end of April, these new pickups will bring you huge profit. My current plan is to slowly buy the dips for next couple of weeks using half of my buying power. And by March 19th, if nothing bad comes up in news and charts don't look fish at all, I will use the rest of my buying power as well. Also, I'm planning to add about $50,000 to $75,000 into my swing account and buy TQQQ or any other leveraged pro share ETFs and hold it until end of April for maybe 15 to 25% profit, because April is one of the best months historically for stock market. Alright Joel, that is all. If you liked the video, please leave a comment and subscribe to the channel. And if you have any questions, you can always leave in the comments. I'll try to answer everything as possible. Thanks for watching. Bye bye.